Welcome, friends. Welcome to my channel EduTech Law. Today, we'll go through the changes made in the budget 2023 in GST Act. So, before we start, please subscribe to the channel. So, first is Section 10. So, Section 10 stands amended such that a taxpayer can opt into the composition scheme even if they are supplying goods through e-commerce operators where TCS is collected under Section 52. That is, now composition scheme can be availed by e-commerce operators also. Then comes Section 16. Section 16 is amended for a condition that if the recipient of supplies or goods does not pay the tax as well as the amount to the supplier within 180 days, then the ITC claim has to be added back to his total tax liability, and also interest under Section 50 has to be paid by him. The recipient can claim ITC once he makes the payment to the supplier with the GST. Section 17. Section 17 is amended to also include supply of warehouse goods to any person before clearance for home consumption. And Section 17(5) of the said section is also amended so as to provide that input tax credit shall not be available. Section 5 is what? Section 17(5) is list of block credits. So in that, one more addition is made for the goods and services used towards CSR activities by corporates, then ITC on such goods or services cannot be claimed. That is being added to the list of ineligible ITCs, ineligible credits. Next comes Section 23. Section 23 says about the persons not liable for registration. So, here some addition of words has been made, that is, notwithstanding anything to the contrary contained in subsection 1 of section 22 and section 24. The following persons shall not be liable to registrations. Those are, it has been three persons, that is, any person engaged exclusively in the business of supplying goods and services, or both, that are not liable to tax or wholly exempt. For them, registration is not required, compulsory. An agriculturist and specified category of SSCs for is mentioned for whom the registration is not compulsory. Then comes section 37. Section 37, the change made to it is same for section 39, section 44 and section 52. The amendment here is that GSTR 1 cannot be filed after 3 years from the due date of the return. So, though the time limit has been extended by notification for class of taxpayers on recommendation by the government. So, if government wants, it can extend the period for the specified class of operators, but GSTR 1, GSTR 3B, GSTR 9 and GSTR 8 cannot be filed beyond 3 years from the due date. So this change is made to all the four sections, that is section 37 which says about GSTR 1, section 39 which says about GSTR 3B, section 44 about annual return, that is GSTR 9, and section 52 about e-commerce returns, that is GSTR 8. Next comes section 54. Section 54 relates to the refund. So here some changes have been made, that is the refund on a provisional basis of 90% is to be given of the amount so claimed, but excluding the amount of input tax credit provisionally accepted. These words have been removed from the said section. So here only the refund on provisional basis of 90% is being given. Next is interest on delayed refund. So the blanket of 60 days of the date of application to the date of actual refund. So beyond 60 days, government got the power, government took the power in their hands to calculate the interest on refund beyond for the delay beyond 60 days. A new section, section 122 1B is being inserted so as to provide penal provision. Section 122 1B is interested for the penal provision to the e-commerce operators in case of contravention relating to supplies made. So penalty of 10,000 or an amount equivalent to the amount of tax involved, whichever is higher, is being levied on the e-commerce operators who, like they are the conditions given, if e-commerce operators does any of these things, so he is liable for a penalty. Like he allows any unregistered person to supply goods or services or both through them except where such person is exempt from GST registration. So if the e-commerce operators supplies goods through the unregistered person, then he has to pay the penalty, or allows any unregistered person from making interstate supply of goods or services. So, because they are ineligible, and if the e-commerce operators does the same, so he is liable for the penalty and does not furnish particulars details in the GSTR 8 for the sale of goods made by them through persons exempt from obtaining GST registration. So, under these three circumstances, the e-commerce operator is penalized by 10,000 rupees or an amount equivalent to the amount of tax involved, whichever is higher. Then comes the amendment in section 132. What does 132 says? 132 section says about the punishment. So here the punishment has been increased from 1 crore rupees to 2 crores rupees, except for offences related to issuance of invoices without the supply of goods. So for the invoices without supply of goods, for those cases it is still 1 crore, but for the other cases it has been increased to 2 crores. And also is being amended to decriminalize offences. So some offences have been removed from the criminal provisions. Those are whether person obstruct or prevents an officer in the discharge of their duties under CGST Act, or where the person tampers with or destroy material evidences or documents, or where the person fails to supply information that is required to be supplied under this act. So under these three circumstances, it has been removed from the criminal provisions. Then comes section 138. What does section 138 says? 138 says about the compounding of offences. So in this regard, the compounding of offences is, the provision says 10,000 rupees or 50% of the tax minimum, and maximum amount of 30,000 or 150% of the tax involved, but that has been reduced to 25%. From 50% it has been reduced to 25%, and from 150% it has been reduced to 100% of the tax involved. So in compounding of offences, there has been a reduction of the tax. Then section 158A is inserted to facilitate the GST portal with other portals like income tax ROC. This is a very major insertion what the government has made in this budget. Like now they can facilitate the integration of GST portal with other portals, like the information share can be shared from the GST portal to the other portals, but only on the consent with the supplier and the recipient. So the government can take the information from the returns supplied, returns filed by the supplier or the recipient, or his application, registration application. From there the government can take the details, or statement of outward supplies, whatever the supplies he is making, from there also government can take the details, and other details uploaded by him for e-invoicing or e-way bill, and also any other details as may be prescribed. So this is a very major insertion what the government has made for facilitation of the income information from GST portal to the other portals. So, whatever the information the supplier or the recipient enters in the GST portal, under those circumstances, that can be shared by the government, but with the consent. Government will take the consent and then it will share the information. But government cannot be held liable for payment of any liability, tax liability, or any penalty which comes after sharing of information. So the person for whose information is shared, they are liable to pay the penalty, or they are liable to pay the excess liability, tax liability. That's it in the GST area. So we'll meet again with another video. Thanks till then and take care. Bye.